FX Nation, what's up, guys? Welcome to our Real Trade Talk podcast, where me and Travis, not Scott, are doing a weekly podcast to try to help inspire, help you grow in your trading. Let's get into what does it take to make a living trading.
Right. So I think in terms of like, instead of what does it take to make what does it take to make a living trading, you need to ask yourself, what does it take to make a living? Okay.
What's the number? What's the number that you need every month? Everybody has a number, right? That they need every single month to basically pay the bills, pay food, gas, insurance, all that stuff, right? What is that number to you? And essentially, how can you manifest or break that down into simple terms where you can understand for it to make sense of how much trading do you actually need? I think people will be shocked, literally shocked, as to how much little trading you would need to do to reach your actual monthly goals.
Mm-hmm. And I think also with that is also looking at your psychology, right? Like, because everybody wants to go full-time trading. So it's like, once you take off the training wheels, right? And like, did you do all your homework basically so that you know actually the number that you need to make every single month? And then also, do you have the reserves in case shit hits the fan? Because I assure you there's probably those months where you probably wouldn't make your monthly profit because the thing that a lot of people don't take into account, the business cost of trading is actually losing money. Has anybody ever thought of that? Like, the actual business cost of trading is losing money. It's part of the game. So it's just like, when it comes to what does it take to make a living? So like in certain situations, maybe in terms of your trading psychology, you have to be real with yourself. You want to go full time. Yes. Can you handle going full time? You really need to ask yourself that, because if
You know what
you,
that entails, by the way? Going full time.
yeah, what
Like
is it?
there's a lot of stress that comes along with it. And that's when the planning part comes into play, the pre-planning, right? Because if you're going to go full time, if you quit your job, you're saying to yourself, like, hey, I have a plan in place, and what I'm going to do now actually works, right? So that means that you have a trading plan in place that you've back tested and you know what it actually outputs over an extended period of time, not over a month, not over 2 months, but if you back tested it over 2 or 3 years, right? You have a data that, let's say, gives you 75 or higher percent win rate, right? That's what that means, by the way. If you're quitting your job, if you're quitting your job and you don't have that, you're already you're basically drilling the holes in the boat before you even start. You're literally drilling the holes. As you quit your job, you're with your DeWalt drill right there, just drilling out the holes of that boat. And as soon as you go into the water, into trading full time, you already have water coming into the boat because you don't have a plan in place.
That's the key, ladies and gentlemen, is having that trading plan in place. Definitely having income coming in. And I think one thing Mark said is having savings. Like, you need to have an emergency savings, I think, is very essential for when you have those rainy days. Um, for myself, I guess, speaking for myself, is like, I have a job, right? So it's like, even though I want to, like, even if I want to go full time, I could use my job basically as leverage. And when I get to the point in my trading where, hey, my trading is basically making the same amount as my monthly income, then I could start thinking, hey, I could cut down smaller and smaller amounts of my job. Maybe I could, instead of working full time, I could work part time for my job and trade full time.
The
So
numbers are
now,
starting to match
yeah,
every month now.
yeah.
You know what? You know what's even funny is like when you start trading and you start making a month that magic number that you need every month, right? And you're like, okay, shit. How can I replicate it? How can I replicate those results? And how consistent can I be at replicating those results? Because if you want to be trading for a living, you have to be consistent, not over a month, not over a year, but over many years.
And I think what's funny is like in this day and age, it's way more than possible to do it because now you have all these proprietary firms like coming out with funding you. Yeah, so I mean, you got to take advantage of that, and that's where it but I mean, in order to get to make a living, that goes into kind of our third part of this series, which we will talk about, which is consistency.
All right, so consistency. So, how can you be, what does it take to be consistent, right? What does consistency mean, by the way? What does consistency mean? So if you look up, consistency in the dictionary or on Google or whatever, what does it actually mean? You know, it's to be, it says here, to be in harmony, to have regular, steady continuity, consistent. You have to be doing the same thing over and over and over and over again. It should come to a point to that when you're trading, your trading should be boring. It should be boring to trade.
Yeah.
It really should be boring to trade because you're doing the same thing over and over and over and over again. And so if you're not doing the same thing over and over and over again, that means that you yourself are getting in your own way because you're trying to change things as it happens. And so the problem that tells you is that if you're trying to change things, that means that your plan is not very accurate. That means that whatever you're doing right now wasn't really thought out, wasn't really back tested. Because the whole goal of you having a plan in place is literally to take the psychological and emotional parts out of the equation. Because literally you're just following the plan. So you're almost like a robot. The soonest that you can make trading black and white, yes, no, and take out the maybe part, that is going to prove to be consistent. You're either going to be consistent good or consistent bad, but at least you're going to be consistent at something.
Yeah, I think to even go deeper with that is you need to be consistent with in terms of trading with in line with your personality and what you've been taught. A lot of people, they will do multiple trading lessons from many different people. And what I've seen is that they will put it together into this
Mesh.
hybrid trading beast thing, and they will just not test none of it. They'll just put it together and they'll be like, yep, that's the trading strategy right there because I got a little bit of market maker, I got a little bit of ICT, I got a little bit of um um all these other trading um people online, and they're literally taking all that without testing one or two of them. Like, you like, the thing is just like, you don't need to do have like 11 different strategies. All you need to do is have one or
One good
two
one.
different or one good one,
One
like
good one.
one good one. It's just like Bruce Lee said, right? I don't fear the man that throws 1,000 kicks. I fear the man that throws that one good kick one time, right? Something like that.
Yeah.
Yeah, and it's the same. It's the same analogy. It's like if you're good at taking, like, for example, we teach different type setups that you could take on the 15 minute, and like Mark, I think yours the type 3 is your favorite, right?
It is. It
Yeah, like
is.
you could take type 3 all day and he's making money on his account. The same thing is like we have people in our um trading group that only take midweek reversals and it works for them. So it's just like what it
You could
is.
be, yeah, you could be trading like a New York continuation trades. That could be your thing. I mean, anything could be your thing as long as you know it well, right? As long as you've written rules on it and you've back tested those rules and in a consistent way over an extended period of time, it gives you the output that you want. And as long as you have that, like it doesn't matter if you only trade type one setups. I don't
Mhm,
care. It doesn't matter if you only take type two trades. It doesn't matter if you're waiting for peak formation highs or lows to appear. Like
mhm,
whatever fits you is really what matters. So I think people try to like mimic or try to copy like what I do, and it doesn't work for them because I think that the easiest way that I can explain it is like the biggest difference between me and somebody else is the time that I took to spend on the charts backtesting, right? And so somebody that comes in tries to mimic that. You can't mimic 5, 6, 7, 8 years of backtesting that I've done on one or two or three different pairs. You can't do that. You can't just mimic that. There's only one way to do it, and that's through doing it yourself. And so that's the biggest thing that I see people do is, they don't understand, well, how come this type one worked, but this other one didn't? Everything looks the same, but no, it doesn't look the same. It's different. There's a reason why it didn't work out. And I'm not saying, and granted, you're going to have losers, right? That may fit all of your criteria and you still may lose, but that the losing part should be very small and it should be controlled because you're using proper risk management. But if you can't, if you don't have any of that stuff into effect, there's no way that you can be consistent at anything that you're doing at all.
yeah, I think to hit that home too is just like, as you're trading, is your psychology consistent with you being discretionary in terms of your trading? Like, are you taking trading like where you might as well just be an expert advisor because you're just taking every single type one setup that you see, you know? Like, are you actually trying to read the market consistently? Or are you just taking whatever trade you see and just hoping to God that your trade management will save you? You know, that's a big thing.
It's a big thing. So I mean, if you think about the fact of, you know, trying to build on consistency has a lot of work to be put into it. It's it's not about just treating M's and W's. It's about treating the right M's and the right W's. Well, how do you know whether or not that's the right M or the right W? What factors are in your plan to let you know that that's the right one or that's maybe the wrong one? The pattern is one thing, right? But you have to have the other evidence to help confirm what you're seeing, whether that be market maker behavioral, you know, behaviors, whether it may be waiting for a crossover, waiting for the candle to close. That's the biggest one, waiting for the damn candle to close. Something so simple, but yet, people get FOMO over trying to get into a trade and get in it way too early. And then if they just let the damn candle close, they would have never gotten into the trade.
And I mean, the only way to really find that out is like, are you using a day to actually look at all the trades that you have taken for the week? You know, I know for a fact there are many people that probably have not looked back at those trades that they've taken for the week. They just took the loss and didn't take the lesson. They took one L, but
Right.
they didn't take the other L
Right.
with it. Uh, it's crazy. So it's just, one of the things, especially when it comes to that, like, especially like, Mark, you made a great point with like just taking like these any M's and W's. Like, I think also it's like, are you looking back at the end of the day and really understanding how the market works? Because if you're good at reading it like a weekly cycle, great. If you're good at reading a higher time frame cycle, great. It's just about, are you doing that consistently, and are you not only back testing but front testing it? And when I mean front testing, did you actually run that demo account that a lot of people told you not to really do? Because sometimes you need that live run of the market to actually see what's going on. Even like, yes, simulators are good, but like actually get the feel, the timing, and all that. That's all part of your business. It really is.
Yeah. And so even if you, like, let's say, have um maybe you don't like demo accounts, right? And so you want to trade on a live account. Okay, so if you want to trade on a live account, go to, like, I don't know, it doesn't matter what the broker is. Probably a non-regulated broker is probably going to be the best to do this on. Put $100 in a broker, right? Ones that doesn't, if you're in the US, for example, if you go to the regulated broker, it's 50-to-1 leverage, right? That's not what we're trying to do here. So what I'm saying is, if you go to, like, I don't know, FX Choice, Trader's Way, Hugo's Way, you're going to get more leverage, right? And the whole point of this is to practice, but the front test, but the practice on a live account. The point of the account is never to, like, make money off of it. It's just $100. Like, think of the last time. What did you spend $100 on last time? For me, I just spent, $60 on gas. So, like, what's $100? It's really not that much. So you take $100, and all you're doing is you're trying to front test, but you're going to do it with only $100. So all of your trades that you're taking are going to be 0.01 trades, meaning that if you blow the account, it doesn't matter. Or if you take a huge loss of like 30 pips, it's only $3, right? So the point of it itself is to practice, is to do that front testing, but you can do it on a live environment if you don't like a demo.
That's a very good point. And yeah, I again, it's really trying to fight off the greed. That's really at the end of the day, and doing what's in your what you can do, and at the same time be consistent. So it's like, if you could practice again with that 100 and you could consistently do it just to see what happens. I mean, that's what I did when I first started trading. Like, I wanted to test with live money. $100 was good enough.
Yeah, yeah.
Mhm.
And so that has to be, kind of the forefront of you trying to build consistency. You got to put in the work. There's there's really no other way. You got to have a plan in place. You have to back test that plan, and you got to know what the numbers are for that plan that you want to have. So if that trading plan is going to be the trading plan, think about it, because the trading plan is going to be the plan that you are basically saying, this thing works, this plan works, and I'm willing to basically gamble, right, my life on it. because you're going and you're trying to make money off of a, you know, biggest financial market in the world, and you're such a little, you know, retail traders are nothing. They're like the grain in the salt on the beach. They're so small, you know. So you have to know what the plan is that you're doing to have any kind of consistency. The consistency is going to come over the time that you spent building, testing, planning, and putting it together, so that way you can be successful over an extended period of time. And so when you back test, I'd back test as far back as you can. Like if you're using TradingView and you have like one of those premier accounts, you can go back 20,000 candles. If you got a pro account, you could go back 10,000 candles. If you use, what's that software? If you use a software called Soft4FX, you can actually go back 10 years. So that might be a better thing for you if you want to go back as far as possible. But that essentially is going to lead you to getting the data that you need in order to build the plan. Once you have the plan, you can start to build the consistency. If you want to give us some feedback as far as what topics you want us to cover, just put it down in the description of the video, and we'll cover all the topics. All right. So thank you so much. Have a great rest of your day, weekend. Be safe out there, and don't let Rona get you.
Happy trading. Trade safe.
Happy trading, guys.